Hi, my name is Ashwini Anburajan. I'm an investor with Side Door Ventures. We're a multi-strategy fund. So we have dedicated funds across Web3, deep tech, and generalist pre-seed, seed stage investing.
Hey everybody, I'm Sumeet, Shah. I'm the founder and managing partner of VHS Ventures. We are a seed stage focused, strictly consumer venture capital firm, consumer products, consumer infrastructure. I've been in that space for the last 16 years / my entire career, working with private equity backed consumer brands on the operations side, and in the venture and startups world for the past decade, helping start 2 early stage consumer funds in 2014, 2019. And we're seed stage focused again, and about to close hopefully our 20th deal.
Hi everyone, my name is Jessie. I'm managing partner at Alinea Ventures. We invest seed stage to Series A in digital infrastructure. So what that means is supply chain, cybersecurity, climate, for example. For the first 10 years of my career, I was a quant on Wall Street, and then in 2014, I left my firm and I started my first venture fund. And so Alinea Ventures is my 4th venture fund. I have 68 portfolio companies, a couple of exits under my belt. And I really love this idea of doing a workshop and to help you guys from like a practical perspective from all the years and years of experience that Sumeet has. I prefer always having something. It could be a deck, it could be a one-pager. Maybe you don't want to share all of the particular specifics about your round. Even if it's a website and like 3 bullet points, it's better than not giving me anything, and I will definitely respond more quickly to that. And I think it also incentivizes the person to have a more fulsome conversation with you, because they'll have your background. They'll be like, oh, I saw that you got really great traction and you have a proof of concept or something like that. Then I can ask you that. How did it go? What was the response? What was some of the feedback? What are some things you're going to tweak on your product roadmap for your feature set, for example? And then that way, if I'm only having 20 or 30 minutes with you for that initial meeting, at least that will be something that's useful, either if I invest in you eventually down the line, or you're going to come away with some sort of thought process from the investor side that will help improve more of your meetings going forward.
I've sat in the founder seat, and so I think that going through accelerators like YC, 500, et cetera, they'll tell you not to send a deck, and I really disagree with it now that I sit in the investor seat, because one, if you're reaching out cold or you're getting an intro from someone who you don't know that well, the likelihood to take the meeting will be based on looking at your deck or at least seeing a lot of bullet points around who the company is. And then the second thing is, I think what Jessie said, you don't want to waste your time in a 20 to 30 minute meeting. So you want to get to questions and dialogue as fast as possible rather than walking someone through something that they may have been able to read before. I think a lot of investors won't always look at the deck before the meeting, but they'll at least, or they will skim it quickly beforehand so they have a sense of who you are. Well, I think that what I would say is you have to look at what the definition of pre-seed is. And I don't think that you should worry about qualifying yourself. You should allow the investor to qualify you. So if you're saying you actually have some revenue, to me, that could be a seed round. We just don't know, right? It's just probably you need to talk to a bunch of fintech investors to get a gauge and then understand where are you on the growth stack to actually target what type of fund you need to go after.
I think knowing your business, you have the cross level between consumer facing and the fintech worlds of those things. I think as you meet other investors that might not fit within your thesis from here, the more that you can find the cheerleaders, if they believe in you as a founder, believe in you as a person from there, 2 things can happen. One, as long as you keep them kind of up to speed about where things are at and kind of just the general asks from it in a very more authentic and transparent kind of way. A lot of these opportunities to crisscross, the overlap happens in flashes, and the more I ask this actually to any founder I meet, the more transparent you are with me in terms of where things are at and how things are going, because I have a finite amount of capital that I can put in, but I have an infinite amount of time that I can also provide in terms of just making the ecosystem better. That's something I've always believed in as a personal motto. And so the more of that level that can help for me, you'd be surprised, with maybe the right fintech investor, the right consumer investor, the finance investor is hey, I've actually been looking to go into the future of layaway, where it's going. Do you know a company that's focusing on this? Oh, let me connect you with Om and Steven. So that's the first piece. The second piece is that you might sometimes have a cheerleader within a firm that really just believes in you, but they may not be able to get through the thesis, but they might want to actually come in as an angel investor.
And then my last point is a little bit about what Ashwini was talking about, is if you do think you are in pre-seed, so again, we don't know enough about your traction. If you do think you're in pre-seed, then look for pre-seed money, right? So those may not be venture funds. It may be some scout funds, but those are generally maybe even doing it off of your safe, for example. They don't have as much capital to deploy. So looking for super angels, looking for friends and family. So just make sure that you're doing that research, like, okay, who is the right investor that would invest at my particular stage?
In this scenario.
Have you raised a seed, or what have you raised so far?
Angel checks.
Okay.
Yeah.
I would say that's actually one of the hardest things to do, because basically, like, you've only done angel round, and I don't know how much revenue or whatever traction you have, but then you're saying, well, we're pivoting to something even bigger because it's a pivot. So you're actually, in some ways, just starting from scratch with your pitch. And so you need to really go out and like sell the idea of the market. And I think some investors may actually want to see LOIs or something to demonstrate. Doesn't have to be revenue, but something to demonstrate that there is movement in the market going forward. And I think that for myself, from a lot of the pitches that we're seeing lately, like the level of traction that people are bringing to the table is pretty significant. Mm-hmm. So to have at least like to say that there's a promise of an industry, sometimes it's just not enough. Like, you know, you need to show, especially in B2B space, the investor's calling you.
Yeah.
Like literally, like I have a founder I'm like texting, like, when is this gonna get done? Because like we really want to be in the round, like wanted to close, we wanted to move fast, like, you know, I'm making intros for them, like, you know,
you're making sure you're keeping your allocation.
Oh yeah, like
right?
I want my I want my allocation. We want to come in for a certain amount of money. We like don't want to like lose out to a bigger investor because we got there very early. We pushed our diligence and we did it super fast. So you will see the appetite of the investor when and just to tell a founder story, like when I was a founder, I never understood, like I would have like angel investors calling me and I like wouldn't return their calls. And like I did, like people would be chasing you down to give you a check and like I was like not registering because it like, you know, because I was just so focused on like the big names and I didn't get that I had like there were actual people that were willing to come in along the way. And so I think like collect money as fast and as quickly as you possibly can. And good founders, a founder just did this with us, like she basically is like tranching the round. So that's 3 million. There's a valuation if you come in at 1. There's going to be a valuation if you come in on the 2nd million. And then maybe on the 3rd, she'll actually get someone, or the last 1.5, she'll get someone to price the round and close it for her. But it's given us momentum to actually like make a decision and get back to her quickly.
I think the other one is if they're kind of giving you a nice brush off, you know, so it's kind of like, oh yeah, well, keep me in the loop, keep me updated, you know, like, oh, send me the whatever investor update, the newsletter or whatever. That's kind of like, that's not actively engaging. Yeah. And it's like, no, some people, they are not good at saying no. Some of us are very good at it.
There's no incentive to say no, almost.
Exactly, because they're going to always keep you on the hook. They want to keep you in the CRM.
It doesn't make them feel bad about you because you said no.
And something might turn and all of a sudden they want to talk to you, you know, and whatnot. So like know what those kind of like vignettes or little comments are to know that that's kind of like okay, we're not going to come in on this round. They're just like too nice to say no.
Yeah, but I don't trust investors like that. Like, you know, like we write long. No, we write a long, like we write and we'll tell you we're not investing. And I think that's the right thing to do. And I've found personally, like, founders come back, like, you know, or you get more interest in the company or something happens down the road, but like you want to say no, like, you know, you want to be with an investor who's going to be really straightforward with you.
I think that's true.
Opinion.
Like that's probably the way we all operate.
Yeah.
But like, you know, that there's like a good bell curve out
people
there
just
of people that are not going to operate like that.
I get the keep me in the loop. Put me on the it's just really hard because you get a lot of negative feelings when you say no. Like it.
Yeah, we've had founder. We just had actually a pretty experienced team come back like 7 months later, and there's a pivot, there's this, and like, you know, it was a very friendly and very frank conversation with the team on why we didn't like it in the first place, and like, you know, we were like, well, tell us if you pull your, like, you know, and it was kind of like, hey, we like it, we want to see if you actually can pull around together, like keep us updated. They didn't keep us updated until 7 months later when they came back. And I think that's the other thing for those investors, right? Like if you're like sending updates, like, you know, like you were giving that SoGal like example, which is so good. Like that's totally true. Like, you know, if you can like actually show traction consistently, people will reach back out to you, especially if they like your space and they believed in you as a founder.
Like I said, the financials don't mean a lot. You're not going to have patents yet. You might have some business plan if you went to get your MBA at Columbia, for example. But like at the pre-seed, it's kind of more assessing the founder themselves and their idea and their vision and their thought process. So that's, you know, someone said that earlier. It's like, oh, okay, it's not the financial model, but it's the thought process, right? So it's like not the business plan, but it's the thought process behind it. And it's like, okay, do I believe in you? So it's not like a seed stage or Series A where like there's like, oh, I need these specific artifacts. And then the operational due diligence is super, super light. So I just need to make sure that whatever I'm investing in, there's an allocation there. I invested in it, and that, you know, whatever comes of it, that's what you're betting on. That's what pre-seed really is. It's kind of a bet because
to safe on that as well?
don't think
But
I've ever
I
done
think
a price.
diligence
seed.
can look really different, fund to fund, because like their documents. Like I don't look at documents when I'm done with the deal. There's somebody else in the fund who looks at them. But what we do, like myself and maybe one other partner, we'll just start getting on the phone and calling people. And I'll give you an example. We invested in like a app to combat loneliness in a social club. And it was out in San Francisco. None of us were there. I like sent the deck to 5 people. I managed to find 3 people that were members of that social club, got on the phone with them, called them, had them give me a rundown of their experience. And only then did we complete an investment. Recently, we did another company, and, you know, the team, it wasn't my sector, but the team asked me, I like kind of found 5 people to call. And we'll do calls, and you're not seeing that side of diligence that's happening, but that actually is actively happening by a lot of funds. They'll call everyone around you. They'll call for references. They'll see, like, potentially try to call your customers. Like that's like a standard process as well. There's the document side of it, but it's so light. Like, you know, are you a Delaware C Corp? Like, are you an LLC that needs to convert? But the other side of it is actually what you should be thinking about is like, who are they calling? And if you're a smart founder, you'll give them a list too.
Okay.
If there are any specific parts to your business that they were also focused on,
Okay.
definitely like mark that in terms of like positions and like attractions from things, right? Because in general, some of those keep in the loop. It's like the good, like the wins, the learnings, and then some like other key pipelines and stuff from there, right? And then of course some asks on that end. But like if you recognize, you know, some specific items that they're like looking for directly, that right, it's all about carrot stick kind of play on that, and that will help us like bring back to the table from there because we're also looking at and tracking on that end. But also like if you find commonalities of like typical things that like themes and categories within the business that people are also focusing on, then you know you'll know also maybe what you should be focusing on for the business as well in general, because that may help in terms of other partners.
Got it. Thank you.
And I want to just challenge one bit that you had said, and so it's that you honestly don't have time until January, right? And so I don't know if someone else had talked about this earlier in the earlier sessions, but like as a CEO, it's unfortunate, but you do have to wear so many hats, including doing the product and launching it and building your company and fundraising.
Yeah.
So, you know, you want those, you know, investors to be there in January.
Right.
And so that does mean that you're going to have to do some light touch. Maybe you're just saying like, okay, Mondays at like 9:30 a.m. I'm just going to set aside an hour and just send out whatever those touches are. And it's not going to hit 100% of the people that you want to reach out to, but it might hit 20%. And then you'll do that over the 5 weeks. That's part of your full-time job. You should acknowledge that and nurture that, especially if they took a meeting with you and have shown interest, and just build that into your work week.
It's also framing your narrative, right? And your fundraising is a narrative and the story that you're telling about your company. So to suddenly go in cold in January of 25, which is a long time away, and say like, here's our story, but you haven't like sort of like laid the pathway that you took to get there, it's going to be so much harder to convince people. So I think Jessie's advice is terrific.
Awesome. Well, let's give our panelists a round of applause. And they will